Hello, everybody. Welcome to Trading the Close. Sorry, there's got some technical glitches going on with StreamYard at the moment, but regardless, let's get into some information on the stocks we've seen today. Just a minor decline on the stocks in general throughout the entire market, and you know the reason why. Tariffs are starting to come front and center again. 25% tariffs on Japan, 25% tariffs on South Korea. Malaysia's also got All right, folks. So again, StreamYard's having some issues. You can see my pretty green screen behind me. But back to the markets. Like I was saying, markets are drifting lower today, but that's to be expected. We've been watching these resistance levels on the charts for quite some time now. So let's get into the data. Let's get into the market summary and the overview page right here that you see displayed. We've got Dow Jones now down 0.45%, NASDAQ down 1.06%, S&P 500 down 0.17%, U.S. oil is up 2.23%, gold is flat for the day, and Bitcoin is down slightly as well, down 1%. So let's jump into the heat map and see the S&P 500. As we saw the S&P 500 down just ever so slightly, but there's a lot of red on the screen, mainly with Tesla. Tesla was one of the biggest movers of the mega caps today. We'll get into reasons why here in just a few moments. We see Apple down 1.78%, Nvidia down 0.6%, AVGO slightly cracking, Netflix also down 0.67%. A lot of red on the screen today, but again, to be expected since we were so high up on the charts and very near resistance. Into the S&P 500, like I was saying, into resistance. You notice on Friday's close, actually Thursday's close of last week, since we did have the July 4th holiday, we did push right up into these resistance trend lines. Now, notice these two from pivot all the way through. Notice how price action broke this trend and is now coming back up and retracing the scene of the crime. This is something we specialize in teaching here at Verified Investing. Whenever these trend lines are broken, it leads us to anticipate a move much like this, a retrace to the scene of the crime. And what happens from that point? It's been rejected. So we'll see how far of a rejection takes place over the coming days of trading, especially if this tariff news does really dominate headlines. Major support on the S&P 500 is going to be a pierce of the 6,000 point area. Next up, we've got the Qs. Also on the Qs, look at this beautiful extended move, getting ever so close to this resistance trend line. Did not tag the trend line, but we got close enough for a kiss and have since retreated back down on the charts. The Qs were stronger than the S&P 500, meaning that they didn't fall as much today. So tech is still remaining in charge. Investors are anxious to buy the dip. The first support, though, on the Qs is going to be all the way down here, 516.53. It's a decent drop, almost 40 points right there on this index. We see here next up on the SMH, also ran straight into resistance. This chart is awesome. I've been harping on parallels for weeks and months and the power of these parallels, but notice where price went and stopped. July 3rd, price ran right up into this area of the inclining parallel channel, stopped and has since reversed. But then also notate where price action caught support. We still have yet to break this inclining trend line. This highlights the significance and the power of the semiconductors in today's market. We have not yet broken this trend line, but as we saw over here on the S&P 500, we did so back in June 13th, but we have not yet done so here on the SMH. We'll see where price action goes. We only have a couple more days left before we're towards the end of this wedge and where price is either going to break up or break down. But considering the extended move that we have here on the SMH, on the daily chart being right at 70, the likelihood is we should start pulling back on the charts, catching support right in this general area. Next up, IWM. Now, IWM is a lot different than these other indices that we're looking at, as this chart has shown breakout potential and power as it continues to push higher on the charts. Now, today, we did see a little pullback, but I want to get into some education with you today to show you why the next support area is 211.15. And it's really simple to do. It's just with trend line analysis. So we take a trend line and we go up to the very high pivot right here and get our first pivot point established on this trend line right up here on the charts. Then we want to see where the next resistance area is going to be. And all we have to do with this is simply draw out the trend line to the next major pivot area. And you can see here, there's a pivot on June 11th that occurred. And if you string that out, you notice a couple different things. You notice that when price came up here, it got rejected. So that was the pivot point established. So that trend line now gives us data and information for the next time price to come up. It did also get rejected. Notice that on this one day, it pierced above, then ended up pulling back, closing right on this line. The following day got rejected even further. And then the next day, price excelled through that trend line. So we could tell there was going to be resistance right here. But now that we've broken out and moved above, much like what we described on the S&P 500 with a retrace to the scene of the crime, that's going to be down here at 211.15, which would be great support for a buying opportunity to extend for price to go up higher. Now, also with this one trend line, look what we can do. Now that we have a new pivot point established, if price continues moving down lower, we can simply move that pivot point up. And then we have our next area of resistance where price on the IWM should at least struggle for a day or two, much like what occurred right here before it does go higher. Now, if we go lower and then reattack that line will have more power. So we'll see if we consolidate in this area, which would lead to a breakthrough, or if this pullback accelerates, pushing us down to 211.15, at which point that would be a decent entry point for another reattack of that declining trend line. Next up, we've got Bitcoin. Bitcoin, as you see here, over the last 4 or 5 trading days, has really been trading right at this 50% area of the parallel. In doing so, it's hit this declining yellow trend line that you see displayed on the chart. It's hit this and pierced it several times. So that's weakening this trend line, allowing for the opportunity for price to eventually go higher. So if I delete this too, you can start to notice that we do have a bull flag formation that's forming on Bitcoin. So all in all, this effort to get through is actually proving Bitcoin is showing strength. It's showing that it can still maintain price in this area. As long as we have a couple more days right in this zone, we should be pushing higher to the next resistance level at 115,000, roughly $116,000 that you see here on the chart. Watch this bull flag formation. If this fails, the next support isn't that far away. We're talking about $104,600 on the chart. Next up, we've got gold. Gold basically had a flat day today, chopping around in this range. You see it created a nice wick. So there were some buyers getting back into gold, especially with that tariff news, creating uncertainty for the future, which does attract investors into gold. All the while, we're not making new highs. We're still chopping around in this area, support area at 32.42 on the charts, and then resistance will be at the all-time high double top at 3,500. Next up, silver. Now, silver really has been an outperformer for the metals most recently. And really, ever since this breakout and confirmation on May 21st, I've been banging the drum saying silver is a buy. And since that point, we've had a nice move up on silver, now up 10%, and it's been consolidating in this area. The next test, though, notice how we've had price come down, and now it's curled right back up. So these pivots are going to be the next test to go higher on the chart of silver. This pivot high at $37.31. We'll see if that gets tagged or beaten tomorrow. And if so, next stop up on the chart is going to be $38.97. Next up, U.S. oil. U.S. oil is starting to stage a decent recovery from the recent fall, but all the while, it's still bearish consolidation on this chart of U.S. oil. Next resistance on U.S. oil is up here at the $70 price point with this declining trend line. Support still down here at 63.86. We haven't yet pierced that on this most recent move down, so that area still would be support should price reverse tomorrow and come into that price zone. Next up, Nat Gas. Nat Gas here also still has support that it's hanging on to right here, $3.38. But notice if I delete this, you can see here with this price action moving down with this big red candle followed by this candle and this wick, price is not closed outside of these two candles over the last 4 trading days. So all of this is inside bar bearish consolidation still on Nat Gas, which then does imply we should be going a little bit lower if this matures. If so, next area for a stop and support is at $3.13. Immediate resistance on Nat Gas is right here, $3.60 with this declining trend line. Next up, the 10-year yield has pushed higher the last 4 days. That does kind of make sense with inflation now bubbling up and worrying. 10-year yield is starting to excel and move back up. The main area I'm watching is this declining trend line, currently at 4.487 on the 10-year. Support for the 10-year is going to be down here at the bottom end of this parallel channel, right at 4.138. But mainly, I'm more concerned with this declining trend line right now. We'll monitor this over the coming days. Ethereum. I'm bringing up Ethereum today to show the resilience of this chart. Notice how when we did put in a bottom here on Ethereum, we moved up, bullish consolidation, and another move up, and then bullish consolidation, then another move up, and bullish consolidation, a fake out, breakout, and a slam back down, but tagged support right here at $2,100. Then has since moved up, bullish consolidation, and then moved up again, bullish consolidation. All the while regaining this bullish bull flag pattern that's been contained here since the middle of May. This chart of crypto on this crypto Ethereum is really impressive, showing that the price action on Ethereum likely can still go much higher and that any dips are buying opportunities for Ethereum. Next level of resistance will be up here at $3,000, but I do still have a tagged measured move for Ethereum if we can get solidly above this declining trend line with a move all the way up here to $4,100. A massive increase there for Ethereum. So any sort of dips, I'm going to be on the buy side there on Ethereum. Next up, we've got Tesla. Now, Tesla hit the news today. Over the weekend, Elon Musk did explain that he's wanting to start a new party, the American Party. And as we know with politics, no matter what side of the fence you're on, you're going to have half the folks not very enthusiastic for you. So dipping his toe back into the political waters is not necessarily what investors for his companies are looking for. So you can see the reaction here today. We had a price drop of 6.79%. I don't think the selling's over just quite yet. I've got another inclining trend line right here that comes in roughly right around $270. We'll see if price action can accelerate down into that area. And if it does so quickly, this could be a quick buying opportunity for a technical bounce up to this next trend line, which is currently right around $314. So a good $40 gain potential should price accelerate right down into this trend line, right around $270. So keep that on the radar. Next up, we've got Roblox. Now, Roblox, look at a mammoth move on this chart, not reaching all-time highs, but still from this sort of view, look at that accelerated move, continued moving up. And then right now, even today, it's starting to poke above this inclining trend line right here at $107. The next area of resistance is at $115.93. However, this sort of move with the extension, look at this big bubble over RSI. It was all the way up here at 88 on the RSI, extremely overbought. However, it's still chugging, moving higher on the charts. Got to give credit where credit's due. Impressive move on Roblox. The next area of resistance should buying continue, especially in the near term, is going to be 115.93, but that should form a significant level of resistance for some pullback action, potentially all the way back down under $100 down here to the 94.34. Watch for any accelerated moves, as those could be a good shorting opportunity in the near future. Next up, we've got Jabil. Jabil, this stock too, incredible move up on this chart. Now we see here it is in all-time highs, not like Roblox where we did have price action above. We don't have any sort of data providing us information where price action could go higher, except for the fact that it just broke out of, in essence, somewhat of a parallel channel. Now, this is more of a wedge over time because they will touch these ends. However, this gives us a lot of information to show when it did break out. It tried to continue breaking out. It didn't. It almost came back in within this pseudo parallel, but then excelled higher up on the charts. And even to this day is chopping sideways from last trading day's price action. This stock is overdone in the near term, to say the least. A pullback is likely, highly likely on JBL in the near future. First area of support will be right here, a pierce of $200 at 199.48. All the while, impressive move on JBL. I wouldn't be chasing. I'd be waiting for a pullback. That way you can capitalize on continued forward momentum. Next up, we've got Netflix. Netflix is starting to show that it is finally breaking and wanting to come back down on the charts. This, just to remind you, when the markets were making highs earlier in the year, Netflix was over here at $1,061. Then we pivoted low and moved lower after Liberation Day, had our low here in April, and since then excelled far beyond the all-time highs and continue moving up higher on Netflix. But finally, we see a big red candle, and this big red candle has been dominating price ever since then on the previous 3 trading days that we see here displayed on the chart. So what this says is that this red candle is now controlling price moving forward. All of the closes of these 3 candles all occurred within this one red candle. So we'll see if we have further downside, a more of a bear flag pattern present itself, which would then increase probabilities for a move down to first support at 12.16, followed by the 11.18 area on the chart of Netflix. Plus, there's a lot of news surfacing about question marks regarding their new reporting style, saying that it's not necessarily as accurate as what it was before, which is potentially going to be hurting investor confidence in Netflix. I see this coming down a little bit more. This has just gotten done too far, too fast on the chart. Another chart that looks very similar is Meta. Notice this exact same pattern. Big red candle pushing price down and then sideways chop consolidation. That's telling me Meta, the likelihood of it going down in the near future is higher than going up. First area support not far away at 702.65. However, the next area is down here at 661.86. This area will be a lot better support for a move back up to reattack this inclining parallel channel. Last up, we've got TSCO, Tractor Supply. Notice a nice breakout buying opportunity here on Tractor Supply. Big, huge accelerated move through this declining trend line. That's on the back of news that they are expanding heavily into the pet segment. So they are trying to claw away some market cap from Chewy and also get some more foot traffic in their stores, having a full line and full service setup for any of those pet owners that are looking for food as well as medicines. It's really neat and in advanced stage of their development with TSCO. You can see here on this chart, TSCO has been continuing to move higher. So this move higher raises question marks because we're near the high ends of the charts. So how much further can TSCO go? Let's see if we get a confirming move tomorrow above this high candle today. And then if so, the support area for a buy would be down here at 54.68, which then easily could then rebound up to 58.39, especially if we confirm above this declining trend line. All the while, I'll be watching this closely because if you look here on the charts, we're pushing 70 on the daily RSI, which implies we are overbought. So we should be coming back in. We'll see if we confirm before we do so, which would then create a buying opportunity for TSCO to go higher here on the charts. All right, guys, that wraps up trading to close. Sorry for these glitches, things going on with StreamYard, with not necessarily cooperating with our technology. But all the while, a lot of data given to you. Happy to be back in the office and hope you guys had a fantastic 4th of July. Look forward to seeing you guys tomorrow. Until then, you guys have a great day.